Hello and welcome to this week's episode of The Capitalist Investor. As always, you have me, Diamond Hands D, and the whole crew, Tony and Luke. What's going on, guys?
What up?
What's up?
I meant to mention I was talking to a client and sent him something by DocuSign, and Tony's name was on it. So he called me, which is a good thing to do if you're not sure about something that you received to sign. And I was like, yeah, that's Tony. He's our, VP, blah, blah, blah. He's like, oh, is that Tony the Tiger? I was like, oh, yeah, that's definitely Tony the Tiger.
That is Tony the Tiger. Heyo. All right, what are we talking about?
So this week we'll do the planning corner, and we'll talk about tax-efficient withdrawals. So
just tax efficiency in retirement. Like, withdrawals is one component of it, right? So what that really means is that when you retire and you are done working and you're done saving and you're now spending, it is on you to make it happen. Make tax efficient withdrawals, because the IRS does not call you up and say, hey, you should have done it this way. They don't do that. It's on you.
Yep.
So that is why. And actually, if you can get this right, our CFAs, like the CFA Institute did a study where if you can dial in the withdrawal strategy, where you're doing tax efficient withdrawals, where you're keeping your marginal tax rates and effective tax rates as low as possible by pulling money from the Roth and the traditional and cash simultaneously, while mixing in Roth conversions, because that's another tax-efficient maneuver in retirement. If you can dial this in, your money could last 20% longer, and that's a big deal. But again, at the end of the day, it's on you. So, fortunately, that's one of our services. Is not just investments, it's not just planning, it is tax planning too, where we have a in-house CPA that does our clients' taxes during tax time, and then it turns into tax strategies from May through December. Tax strategies might be the distribution strategy we're talking about.
Yep.
It could be Roth conversions. Do they make sense? Do we want to pay that much tax? I think it's like there are efficient things you can do, but then it's at the end of the day, it's like, do you want to prepay the tax now? So what are your guys' takes on this?
Yeah, I think we've been talking about it for a while now, but having a long-term tax strategy is probably one of the most important things you can do for your retirement. And it's not necessarily something that you can do, like the day after that you retire. So, the preparation of your 1040, your taxes every year, there's a limited amount of stuff that you can do there, right? You want to make sure you're taking all the deductions, or, if you're getting the larger standard deduction now, there's only a certain amount of stuff that you can do for the current tax year. But, through a financial plan, there's a lot of things that you can take a look at to do to make your taxes in retirement lower. So Tony mentioned Roth conversions already. Whatever the strategy may be, it's going to be different for every, single person out there. So, just because you hear your neighbor or, your brother-in-law is doing, $15,000 a year in Roth conversions, that doesn't necessarily mean that something like that is going to be right for you.
Right.
So, building that tax strategy through the financial plan is really the only way to do it, honestly. You can kind of take guesses at, things that you think might be good. But, working it through that financial plan is going to be the key to getting the numbers right.
Right. But having the plan is one thing, because it gives you the long-term vision. You have to understand that you need to recalibrate your tax strategy every year, because different things happen. Tax laws change, right? Things pop up. Hey, I need to put a roof on my house, and I was not expecting that. I got to get the money from somewhere, and I got to pull it from my investment accounts. Okay, well, that's a taxable event in some cases, and that might increase my taxable, where I am on marginal brackets, things like that. And that particular year, I can't do a $15,000 Roth conversion, like you said in your example, Derek, because I got to pull out $25,000 to get a new roof. So again, the whole thing on that part is like having a long-term plan and vision is great, but we do have to recalibrate and go back to the drawing table on an annualized basis.
I just don't think most people realize what is out there sometimes. Like, most people think, oh, I just need to use the tax code that I know to my advantage when I file my 1040 at the end of the year, and I'll be okay then. If I save a couple thousand here or there, like, that's all that matters. Like, it's a lot bigger than that, especially if you have money in all three spots. We talk about the tax efficiency ladder a lot in our classes. You have the Roth accounts, which are the tax-free, most efficient accounts. Your IRAs, 401k, tax-deferred, which is your second most efficient accounts, and your least efficient, most efficient accounts are your taxable accounts, checking, savings, non-qualified. If you have money spread out through all those three different types of areas, you can start financially engineering all kinds of different tax things going on. So, for example, there's charitable contribution funds that might make sense if you're in your 70s. Some opportunity zones. I'm just throwing these out there. But I don't want to get into details. This episode's not about getting into detail about those. Right. But if you need to do Roth conversions, and a large Roth conversion, because, for example, I had a client yesterday I talked to that was 71 years old. They're approaching 73 RMD age, and they aren't going to actually withdraw most likely any of their money from their 401k. It's really an estate planning tool. They're probably going to do like $1 million Roth conversion, and we have to find a way to hedge against those taxes. So there's a lot of moving parts and pieces you can use to not pay Uncle Sam.
Right. And and the Roth conversions, just I always figure like it's a chunk at a time per year, right? So it could be a multi-year strategy. But think about this. So a lot of people really get wrapped up in their returns from their investments, and they just look on their statement and say, oh, up 19%. But actually, like, having a proper tax strategy actually leaves like more money at the bottom of your checking account where it really counts. Yep. And what is that worth? And I think Vanguard did a study, and it's worth, if you do this properly and you do it every year, it could be worth almost 1% per year on an annualized basis. That will not show up on your Fidelity or Schwab statement. Yeah. Where it does show up is it shows up at the bottom of your checking account. So you just have more money. So
I like more money, personally.
As you should, Luke. I do too. I'm going to join their camp, just not your camping excursion like you said the other podcast.
You can join me if you want. We can cuddle in the tent together.
I'm not camping with you, Luke, because you're just gonna show up and be like, hey, where is everything, Luke? I'm like, I'm here to be one with nature. No,
that is exactly what I said, and that's what I.
Well, you were one. I was one with nature.
All right, I digress. So, but anyway, again, the tax strategy is so important in a lot of different aspects in pre-retirement planning. Should you save to Roth? Should you save to traditionals while you're working? Good question. I need to know how much you make. I need to know what your other lifestyle components look like. And then does it make sense to do Roth conversions in retirement? Well, how much do you spend? Again, what's your budget? How much money do you need? What other pockets of money do you have? Tax deferred, tax free, taxable, where are all of these things to help coordinate if a strategy does exist for you, and then executing the strategy. So, all right. Well, that's tax efficiency. If you have questions on that, reach out, info@swpconnect.com. And as we do these financial planning corner topics, if anyone has a topic out there they'd like us to discuss, please reach out. So, all right. Derek, take us home.
Well, you pretty much
did I do it?
You did it for us right there, so that's fantastic. But yeah, if you have, like Tony said, hit us up at info@swpconnect.com with questions, comments, show ideas, and we'll talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.